Well, hello, this is Mike Jacko with Minria with the Minnesota Real Estate Investors Association with another Flip It Friday video tip for you guys. And tonight I wanted to talk about the difference between a dealer and an investor from a tax standpoint. And I was just reminded of this topic because I'm at the Colorado RIA here in Denver, and they were interviewing a tax accountant, and one of the questions came up was about dealer status. So I thought it would be a timely thing to talk about that, especially considering some of us are in the process of doing taxes for our business, which is going to be due in a couple of weeks for if we filed extensions. All right, so the difference between a dealer and an investor from the IRS standpoint is if you're an investor, then you can depreciate your properties, you can sell on seller finance terms, and you get other tax benefits as an investor because you're buying the properties with the intent of a long-term investment versus a dealer status. And the best way to think of dealers is like a car dealership. You buy something with the intent of reselling it for a profit. Well, that's what flippers do. Rehabbers, wholesalers, we buy stuff, fix it, or we buy stuff and wholesale to somebody else with the intent of making a profit, not with the intent of holding on to it as a long-term investment. So the IRS classifies both of them differently. All right, and if you are classified as a dealer for your business or for yourself personally, because you're doing your dealing type of business, flipping through your personal name or through a specific business, that business will not be able to, or you personally will not be able to hold long-term investments and get the long-term investment tax benefits, like depreciating a property or selling a property on a contract for deed and taking installment payments. And if for more information, I would probably talk to your accountant or CPA about that. They can better explain that difference for you. But the one thing is you do not want to be classified as a dealer. And if you are doing flipping and doing long-term investment, long-term holds, you can still do it. You just need to plan properly and structure your transactions so that they're separated in like separate entities, so that whichever entity you're doing your flipping in is not the one holding on to long-term investments. And that's just one tip to work on with your planning. So I would talk to your CPA or accountants on that one for more information. Thanks, and we'll see you guys back here next week.